Have you seen what's going on with commercial real estate? Right now, it's falling, but it has a risk of plummeting, and this is going on all over the place. In today's video, we're going to look at what's going on with commercial real estate, how that connects in with the debt market overall, and of course, the risk to the financial system. You came here for the truth, so let me unveil that for you. First thing we're going to do, we're going to see what's going on. Then we're going to understand why that is the case, and we will finish off with what you can do about it. Let's begin. Blackstone's $67 billion real estate investment trust, REIT, sees withdrawal requests decline. Wait a minute, what does that mean? What withdrawal request decline? How does that work? Well, you've got investors asking for $2 billion. And what happened here? Well, they limited withdrawals for an 11th straight month. So for the last year, Blackstone, one of the biggest companies out there, have told their investors, you cannot pull your money out. You're holding in enough. Now, one of the advantages of a real estate investment trust over, trying to get in with a syndicator, for instance, putting your money with somebody who invests directly in real estate or purchases and does all that. This has the advantage of, I'm liquid. I could just pull my money out whenever I need it. But what about when there's a problem? Oh, you can't pull your money out. And so that's what they're experiencing today. I have seen funds that go into restriction mode, and the people that have their money in, or like the advisors who are holding on to people's cash, and they decided, oh, I'm going to put my client's money in this, and they are restricted. They are furious, and rightfully so. Wouldn't you be upset if they said, oh yeah, you remember your life savings that you put into this fund? Can't get it. But you see the prices falling, and you can't touch it. This is why we need to have our ducks in a row. We need to have our stuff measured out and ready, because the system that we are dealing with right now requires us to know much more than the average person. All right? The problem we are experiencing is global, with higher rates exposing underlying problems. That's the focus. That's the center right now. You increase interest rates, suddenly all these problems come up. It's SVB, yes, that's one, but everything else is connected. Everything. And we only see that when the rates are high. Well, look, when the rates were low, people were buying JPEGs, pictures on the computer screen of monkeys. And they were paying hundreds of thousands of dollars, millions of dollars. And not only that, we were told that anybody who didn't agree with that was stupid. I mean, that's the world we live in. When you bring interest rates down, monkeys, pictures of digital monkeys, of pixelated monkeys, are worth a lot of money. So what can I tell you here? What can you learn from that? The next time interest rates go down, buy the biggest garbage crap that you can. And I'm not even kidding. That's how crazy this is. It's going to be worse than last time. It's going to be worse. And that's sad. That's sad to me. Okay? It's pathetic. Lowering rates needed, but might come too late. Okay? And that's the thing that we're dealing with right here and now. You remember WeWork? Yeah, they're still around. They skipped a $95 million interest payment. Oh, that's right. They're just getting the grace period, and they'll be able to pay it back. Oh, I'm sure. This is another player in the space. Imagine they had all of this commercial real estate. They bought a lot of it. They were a huge buyer. And now they have said specifically, we are going to get rid of a lot of our locations. We'll keep the ones that people are still going at, but the underperforming ones, they're gone. That's going to open up a lot of space, more space in commercial real estate. Commercial real estate debt maturities, $2.5 trillion in the next 5 years. And that's going to be at higher rates, of course. So we see this, and just in the next year, it is a big amount as well. Looking at this, all property prices, specifically commercial real estate, is not residential, and it has already come down 10% on a national level. But you look at areas like San Francisco and others that has really taken a hit. So we will see how that goes. Look at the prices, just breaking it down. I thought it was interesting that apartments were actually affected. Now, they did run up way too high. That's clear, but you can see that as well. Apartments, I do think that is the number one place, despite the prices. You got to understand your market, of course, but there's going to be more and more and more renters. You got to look at this 10 years out, 20 years out, whatever, looking at down the line. The average person today, that's a young person, they will not have a desire to own a home. They don't want to even have a desire to own a car. They're going to get their phone on their app. They're going to touch two buttons. The autonomous robot vehicle is going to appear there. They're going to get in there. They're going to go off. When they're done with this town that they've been living in, the city that they've been living in, they could just give the keys back. Here you go. I didn't own any of that furniture. I'm just going to take my my laptop or whatever, and I'm out. That's the way that the future is progressing. So knowing that, it means that commercial real estate, specifically, looking at this with these apartment buildings, even there's these other things like the co-op type buildings that are more like dormitories and things. Okay, that's definitely possible. But in general, apartment buildings, multi-family real estate, it's called multi-family real estate. It's technically residential in that respect, but it's considered to be commercial real estate. So understand the distinction in between those two. It falls in the commercial side, but it's for residential. Okay. All right, looking at this, transaction volume has fallen off a cliff, and for good reason, because businesses, investors, they're not getting into this right now. They don't want anything to do with this because they realize that this is getting very bad. It's getting very bad. So we will see what happens. I want to talk about China. I'm also going to talk about Canada. But before we do, have you found this video informative? If you have, hit that thumbs up button. It's right down below. And when you do that, it supports the channel. So please do that right now. Here we go. Looking at China. Property crisis voted as the biggest risk for China's stocks. So, of course, that's an important thing. Not just for the market in general, like the property sector. It affects everything. It affects everything. And so, number one, overall in China. Does China's property bust make financial crisis inevitable? Oh, no, it doesn't. That's what they say here in this Wall Street Journal article. Real estate as a percentage of Chinese banks' loan book. And so you see that, the developer loans are a smaller sum compared to the individual residential mortgages, okay? And that's what they're highlighting here. I'm just showing you that, as well as Canada's housing body says that it will take $1 trillion to meet their goals. So they're going to have somehow $1 trillion to put in and invest. Not necessarily the government, but $1 trillion needs to go in to fix the problems of today. Wow. They're not going to do that. I mean, it's just not going to happen. And yet that's where we are at. There is so much already going into it. Now you increase interest rates, we got a problem. There's not enough homes being built. You've got this issue where, quite frankly, they're trying to change the zoning laws, but do it in such a small way that is, it's not enough. It is absolutely not enough. There's so many fundamental problems, not just inside Canada, but elsewhere, where they have applied all of the infrastructure in these small areas that just cannot support all the people. And it's a matter of fact, all the jobs are in one area, all the, the infrastructure, you can't do that. And that's why we had a huge problem a couple years ago, and they fixed it, wink, wink, fixed it with printing a heck of a lot of money. Now that creates inflation, and you only stab your own citizens right in the back when you do that. But of course, maybe it's all intentional. And so we need to discuss what you can do about it. You've seen what's happening. You've seen why it's happening. And now we need to talk about what you can do. Avoid commercial real estate except for a contrarian bet. So if you want to take a big risk, absolutely, you can go into it. But don't think that this is somehow safe and secure. Retail and office, watch out. Any deals can be had for much cheaper right now because you know that they are dealing with a problem. They have way too much debt in this field. And so you can come in and say, hey, I need to rent this place. Maybe I want to open a business here. What kind of deals can you give me? And then watch the exposure as the domino effect is evidence. You may have no direct exposure to commercial real estate, but watch the companies you invest in, maybe your own personal business you operate, or the business that you work for. Look at how they've been exposed to commercial real estate, retail, and office. I think it is pretty significant. Okay, so those are just 3 things. We'll talk about more on future episodes. If you're liking these videos, if you're already subscribed, I know people get unsubscribed every day automatically by YouTube, but for those who are still here, then it's important, of course, to just follow along because I will bring you the latest and greatest. And if you're like, I gotta start from zero, I gotta start from scratch, I need to know all the basics, that's what Compass is. Your financial journey starts here, and guess what? It's free. No email, no ads, no paywall. There's nothing. Just come to the website, themoneygps.com, click on Compass, and this is what you see. And you go down, 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 down. There's a bunch of these really short videos, and you're going to get it all. Themoneygps.com. Here we go. Comment of the day. Dave Hendricks says, I refuse to spend any money at a restaurant that incorporates robotics. I'll eat at home first. I want to let you know, Dave, thank you for the comment, by the way, that there's going to be a time in the near future where you will not be able to go to a restaurant unless it's like the high end, and you're just going to not get a human. I mean, it's just, there are going to be none left. Okay, and it's coming fast. And so that's the circumstance we are dealing with right now today. Jobs are being replaced, AI and automation, and it's coming as fast as they can do it. So the faster they can get this thing out, I'm telling you, they're going to implement it. It's already happening. They're in the testing phase. And so that's what we're dealing with. You got to get your stuff in order right now today. I appreciate you being here, and I'll see you on the next one. Take care.